What's up, everyone? It's Karthik with MoneyVest. So market's going absolutely ballistic and rocketing higher a little over 1.5%. The Nasdaq is up very, very nicely on the back of those inflation numbers that came out earlier this morning. So that's what I'm here to break down. So PPI numbers coming in extremely strong, better than expectations here. So if you take a look at the producer price index for year over year, the expectations were for 2.7%, actually 2.6% was the consensus. We came in 2.2%, not only lower than the consensus, but also lower than the prior revised number. So that is a significant reduction in wholesale producer price index. These are the wholesale final demand numbers. Month over month, we came in at 0.1%, which again was lower than the consensus. So that's double beat for inflation and ex-food and energy. So core PPI coming in with absolutely no change, and year over year sitting at 2.4%, way below expectations of 3%. So as a result, if you come take a look, we've got an extremely green day so far, with the Nasdaq here pushing up over 1.69%. So lots of momentum for technology stocks. We have S&P 500 up a little bit over 1%, and the Dow Jones over 1.77% as well. So this right here is pretty much the state of the market as of the time I'm recording this video, with Amazon, Google up anywhere between 64 basis points to as much as over 1%. But then, of course, you've got Netflix up over 1.45%, Microsoft 1.5%. I picked up Microsoft and Google last week. Meta's up over 1.6%. And then I've also created another index which is going to track the more prominent semiconductor stocks. These are the semiconductor stocks here, NVIDIA, TSMC. I'm going to break that down in just a minute. Up over 1.65% as a result. SOXL having a very strong day. And I'll be honest, I actually did close out my FNGU trade slightly too early. Again, just under $1,200 profit, but on the day today, it is up very, very nicely. It's up a little bit over 6.7%. So if you're still holding on to this trade, congratulations. $367 is where it's at. That's over $100 profit per share that we were able to capture since last Monday. So last Monday is when I actually bought majority of the shares in market open, and again did some more buying on Wednesday. So markets here are doing incredibly well. QQQ is up over 1.7%. So there's greenery across the board here for the markets, of course, with the Magnificent 7 index up almost 2%. So a lot of liquidity flooding over to these Magnificent 7 companies, with Tesla up over 4%. NVIDIA, I also picked up NVIDIA in the low 90s, up over 5.22%, with AMD up almost 2% on the day here. So coming over to the fear greed index, we are still within extreme fear at 24. And what I have done now is that I've essentially created a MoneyVest dashboard. So until we get all these things over to our MoneyVest platform, what I'm going to do now is that I'm going to be sharing multiple times during the day as the markets are open, some very, very critical, very important readings for all these indicators that help us really make strong, confident investing and trading decisions. So what we have, of course, here is the MoneyVest index, right? That's the most important value for me personally, because this already accounts for a lot of other indicators. It's a calculation. Then we've got volatility reading. So that's the VIX. Right now we're trading at just under 20. So if you come over to VIX here, 19.47, 19.46. So that's really what that reading is. And the VIX percentile going back over 35 years. So right now we're in the 60th percentile for the volatility reading, right? So you can actually do that, see that from over here. This is our entire spreadsheet, and you'll get a better idea of where the VIX reading is, the percentile levels, the different percentile levels, and again, what action to take, because that's going to be color coded. So if you come over to our dashboard, it is yellow. So that means it's in a bit of a neutral range, because we are pretty much trading at a median value of just under 20. Now look what happens if I increase that number to 25. It goes up to 82 percentile. This number becomes yellow as well. If I go up to 30, you'll notice that we now are in the 91st percentile, and that turns green. If I go up to 40, now we're in the 97 percentile, and look what happens when we go up to over 48. We are in the 99 percentile, closer to 50 here. We're going to be at over 99 percentile. So those are all color coded. So for example, last Monday we were at 65. We were at the 99.72 percentile value on the volatility. And really the idea here is that once all these color codes are green, if they're all flashing green, then that is a significant risk-reward favorable environment for the markets. If they are yellow or starting to turn red, so for example, if volatility, drops down to as low as 12, right, then we're percentile wise in the 9 percentile, right? So that is a really, really low value for volatility, just warrants caution. And we need to be alert for when the VIX can spike again. And for that, we also have some other leading indicators that we're tracking. For example, the VIX contango level, which is now at negative 1.3%. Also a really, really low level. And then we've got S5FI and we got S5TH, another two really important metrics to understand market breadth and overall technicality. And that is just S&P 500 stocks trading above or below their 50 and 200 simple moving average. That is also what we're going to be tracking, as well as their percentiles in the past. So I will be doing a lot of data breakdown for all of you, so you don't have to, of course, do that. So if you come over to my spreadsheets here, this is all the data for S5TH. This is all the data for S5FI. And this right here is going to be the correlation matrix that I'm going to be also creating. And then, of course, we've got the unemployment data that we're also going to be including, the initial claims data that we're also going to be including, the yield curve. Everything is going to be presented over here on the dashboard, as well as the PCC, that's the put-call ratio. We're also going to be tracking the VXX reading, so that's a volatility ETP. We got the Magnificent 7, we got the semis, we got the VIX futures, the term structure overall, and the yield curve, as well as the S&P 500's RSI and the drawdown percentages. So these I still need to create the data sets for. I'm going to be including that on this dashboard, and multiple times during the day. Like I said, I'll be updating these values manually to share this with all of you, all the members in the Discord, to help you better understand where we are in the current market environment, right? From a risk reward standpoint, how is this market positioned? We'll also include the S&P 500's valuation in this dashboard as well. So eventually, of course, this is going to be the layout for the website. We're going to include all these really important values over on the MoneyVest platform, but this is what you can expect from a trading decision standpoint, from a risk reward standpoint, from overall market structure standpoint, where we are in the current environment. So what I can tell you is that considering the volatilities come down significantly, and again, we're starting to see the markets, rotate back higher very, very nicely. We are in a nice little technical rebound as the RSI, the MACD was incredibly oversold. Yesterday's volume was really, really low. But at the same time, I think tomorrow's inflation numbers is really going to be the make it or break it moment. If we come in a little bit harder than expectation, I think a lot of these gains from today can get erased or wiped off if inflation comes in super hot tomorrow. If we see a continuation of today's inflation numbers, that we are coming in very, very strong, we're beating expectations, we're coming down, trending lower, then that can be a huge continuation of this rally, and most likely we're going to see some potential momentum back up to all-time highs as well. So that is something to keep in mind. Of course, tomorrow's inflation numbers is really going to be make it or break it moment for the market. But from a technical and from a risk reward standpoint, I think these numbers are going to be super important. And right now we're at 3.36 for the MoneyVest index with a VIX reading of under 20, putting us at just under 60th percentile. So we're right about that median value for volatility in about 33 years or so. So when it comes to, again, individual stocks and, of course, looking at the markets, we've got the SMH bouncing off of that really nice higher low, so at around 199, 198. So I did pick up SMH and VUG, a lot last week. I did pick up NVIDIA, picked up Microsoft and Google, picked up FNGU. That was more of a trade, but other stocks were, of course, more of a long-term hold. So we did do some buying last week, and my cash exposure now sits at under 20%. If you do see that any type of weakness or pullbacks again, or any type of red in the markets, I will be looking to deploy cash once again into the market. Coming over to the NASDAQ, so IXIC. So what you'll notice is, once again, seeing a very nice momentum back up. Again, we were very, very oversold on the daily time frame. As you can see, the RSI, the MACD was oversold, and we're starting to see that bounce back up for the markets. And same thing is true for SPY, as we are starting to see that momentum back up with 1% higher RSI, MACD, and the L3 banker oscillator all pushing higher to see that recovery back up. So next resistance for S&P 500 is going to be closer to, well, we're talking about SPY right now. It's going to be closer to around 554. I believe that, by the time we get up to that level, we're going to most likely see some pullbacks, because this is technically going to be the fourth green day in a row for the S&P 500. So, talking about streaks, that is also something that we have to keep in mind. And for the NASDAQ as well, this is going to be, I believe, the fourth green day in a row. Yesterday, we were up 22 basis points. The day before that, 0.5%. The day before that, 3%. So 4 consecutive green days in a row for QQQs definitely does suggest for some potential, downside. In other words, we have to be prepared for a bit of a small dip or a pullback as well. But a very, very strong day so far for the markets trades are doing really well, long-term positions doing really well. So let me know your thoughts down in the comment section below, but I would put us somewhere in the neutral zone at the moment. Risk reward still solid, considering the technicals are still oversold and we're starting to see that bounce back higher. But from a risk reward standpoint, volatility's come back down. We do still have majority of stocks trading above their moving averages, 50 or 200 SMA, and we're nowhere near close to those high percentiles of, let's say, 80 or 90 percentiles, right? So for example, if I turn this number into 89, then this number, actually we have to come back to this number here. So if I come over here and all the way at the bottom, and if I move this number up to, let's say, 89, then we're going to be in the 96 percentile, which is going to put us roughly around here, very, very high. So those are some things to keep in mind for the market, because right now we're still within range, within a very reasonable range for the entire market at the moment. So hope you all enjoyed this video and a complete update on the markets. Let me know your thoughts down in the comment section below. And again, I'll be sharing those values multiple times during the day to help you better understand where we are from a more technical standpoint and also from a more market structure standpoint as well. So as always, happy investing. Links can be down below if you want to join our Discord and our Patreon. Happy investing. I'll see you all in the next video.